recording. So we are going to start recording now before I forget. All right. So any new investors here, if you're new to the club or you're new to investing in general, we actually have a handbook, and you can go to that link I have up there, which I can drop in the chat. But essentially, let me drop that. Chat. Boom. So that link is going to take you right to the handbook. And then the handbook actually was put together a few years ago. We're going to continually be updating it. We have a new education team, right? So they're going to be working on that soon. There's all kinds of info on strategy and terms you need to know on there. And then we also have our Discord. Any of you who are not in the Discord, I can actually shoot you a link right now. Let's see. Boop. The Discord has all sorts of people in it. Chris is in there too. Boop. There we go. And so, yeah, you can ask questions in there. There's all sorts of resources within the club. There's a whole new member section, and there's a whole beginners info section in the Discord. All right, so club funds. We have a bunch of new club funds that we should be getting, assuming we get approved. If there's anything like subscription-wise, maybe you want a subscription to some investing info site or something, let us know, because we're always looking to provide you guys with more info and resources at your disposal. And now Mason is going to talk about Poly Canyon Ventures.
Yeah. Hey, thanks, Connor. Yeah. So just a quick shout out. Poly Canyon Ventures is a really cool program that I've been a part of for a couple of years now, and it's a student-run micro VC organization, and we look to impact in really early stage startups coming out of Cal Poly. And it's a great way to get some hands-on investing experience and learn how to generate a thesis about up and coming startups. So if you're interested in that, and there are a number of roles in there, we're looking for students from all different backgrounds and in different majors. So everyone is welcome to apply. And I think we're closing the applications, April 16th at midnight. So please take a look applying there. I'm currently the executive director of that. So if you have any more questions, feel free to reach out to me. Thanks, guys.
All right. Thank you, Mason. Yes. If anybody's interested in that, you can hop on that link. It's in the chat as well. So that is awesome as well. All right. So something we did every quarter since actually the fall, we have a trading game. So if any of you are new to investing or even very, very experienced investors, every quarter we have a game. And that game is everybody competes. Everybody's given $1 million. And it's not real money. It's fake money. It's a game, right? But every quarter we have a winner. I believe the first quarter we had, let me look. Announcements. I believe it's under rules and info. Thomas won first quarter with 25% returns. And actually in the winter, I ended up winning with 37.05% return on my money. So that's always been fun. And it's just every quarter we run that trading game. And I believe, did I already drop that link in there? Yes, we've got the link in the chat as well. So you can hop in there, log in, and get trading. And that ends on the 1st of June, which is the last day of the quarter. All right, so today we're joined by Chris McCann. And Chris, did I say your last name right? I just want to check.
You did.
Okay, because there's a lot of C's in there.
Yep.
Yes. Who is it that's not muted? Somebody's not muted. Let me check. Let me get him muted.
I'm good, thank you. Yeah.
Oh, there it is.
You say 120.
Okay, I got it. All right, there we go. Thank you, whoever said that and actually who it was. But yeah, so Chris has an angel portfolio of over 20 companies. He's a co-founder of Startup Digest. He's an early investor in all sorts of cryptocurrency projects, which we'll be talking about later. We'll go over some basic cryptocurrency stuff. And he's also the co-founder and a partner at Race Capital today. So he's done all sorts of things and was actually one of the first students to go through the business college kind of through unofficially through the entrepreneurship major minor program. So yeah, welcome, Chris. Could you give us just kind of a overview of what happened at Cal Poly, and then what you did with the major, and then just kind of how that led into what you do today, I guess. Just kind of your whole journey.
Yeah, sure. Happy to talk. And but by the way, since it's a smaller group, feel free to, anybody's more than welcome to chime in. This doesn't necessarily have to be a monologue on my end. So so yeah, feel free to chime in. But it's really cool to see Cal Poly even has like a investing club, an entrepreneurship club, Cal Poly Adventures. Because when I was at Cal Poly I graduated in 2009. So back when I was at school, there was like literally none of this was what was around. I remember originally I picked the business concentration, and originally at Cal Poly they used to be very strict on like the classes you can take, and so I had like there was like a really limited set of classes basically I had to choose from. But I guess me being the sort of not so rule following undergrad, I basically just picked classes I thought were cool, and I started going to them. So I took some CS, some math, some philosophy, some psychology, some economics, a whole bunch of stuff. And basically my advisors were like, what are you doing? You are not going to graduate. And so I had to get kind of creative. And so long story short, I ended up basically starting and running this thing called the Ray Share Business Plan Competition at Cal Poly. It was founded by this guy named Ray Share, who was the former founder of Guitar Center, who was a Cal Poly grad. I don't know if it's around anymore, but that was like one of the really early sort of business-oriented business plan competitions. And then also I ended up running this thing called Innovation Quest, which I think might be around still. It was like an engineering-focused competition started by a bunch of the sort of well-known Cal Poly alum in the technology field. And so while I was running both of these things, it started to kind of get the attention of the dean, the provost, the head of the university, and they wanted to take kind of all this stuff and turn it more into an official program, like part of the actual school itself. And so I ended up kind of helping out a lot with that. But my only stipulation was I said, if you guys end up creating the entrepreneurship major, I want to be the very first one to graduate. And I want basically whatever I've done so far to basically count for whatever the graduating requirement is. And the dean of the business school very reluctantly was like, sure, whatever, go ahead. and so me as a student, I was on the hiring committee for the professor who ended up basically sort of running the entrepreneurship stuff. His name was John York, which I think he's emeritus now. I'm not sure if he's there anymore, but it was really odd being me as the undergrad on the hiring committee for one of the professors that they brought in. But yeah, I guess I can sort of share many more stories, but the long story short is I had to be very entrepreneurial in creating my own major to allow myself to graduate, because if I didn't, I wouldn't have graduated Cal Poly. So it was a very self-serving sort of exercise. But I guess to fast forward a little bit, when after I graduated, I knew sort of very quickly on that I wanted to be in Silicon Valley. I wanted to be in the Bay Area. And so the day I graduated, I basically threw all my stuff in my car. I drove up to Palo Alto, no plan, no idea, no real anything. I basically just came out to Palo Alto. And I'll give you kind of the extended version. The first place I ever went to was this cafe in Palo Alto called University Cafe. And I was sitting there, it was kind of around brunch time. And there was two guys next to me talking about Facebook. And I look over and I look at them. One of them was Mark Zuckerberg, and the other guy was this guy named Michael Arrington, who's the co-founder of TechCrunch. They were literally just sitting next to me while I was having brunch, talking about Facebook, and I could literally hear their whole conversation. And at that moment, that was when it kind of crystallized for me that this is the place that I really wanted to be. And I don't know how I was going to figure it out. I didn't have a job or anything, but I was going to figure it out. And so I ended up getting a shitty job, which I didn't really like, which kind of forced me to start my first company, which was called Startup Digest. It was one of the earliest tech newsletters in the space. We used to cover events and articles and content and new product releases and investors and all this sort of stuff. And while that sounds very normal today, I guess back then, two things. One, tech newsletters were not really a thing. We were practically like the only ones kind of doing it at the time. And then it's also hard to remember or think about, but the whole startups and startup ecosystem wasn't really like a thing back then. It wasn't like as popular as it is today. Like it was very much more for like the geeks, the nerds, the outcasts. Like it wasn't like it wasn't really in like the kind of popular culture, if you will. One of the things that I think really kind of changed that was like the Facebook movie. Post the Facebook movie, everybody wanted to be an entrepreneur. Everybody wanted to work at Facebook. Everybody wanted to do startups. But before then, it wasn't really like the cool thing to do. But anyway, that was the company we started. It was called Startup Digest. The long story short on that one is we ended up growing to over 1 million subscribers. That company was acquired by Techstars, who still owns and operates it today. And then that's what eventually led me into the venture capital industry. So I ended up joining a firm called Greylock Partners, one of the top 5 firms in the Valley. I work with 2 guys really closely, Reid Hoffman, who's the co-founder of LinkedIn, and John Lilly, who's the former CEO of Mozilla. I mostly focus on a lot of the emerging tech fields that we were looking at. So all things around AI, VR, esports, autonomous vehicles, robotics, crypto, basically all the weird stuff they usually gave to me. That was kind of like my crossover into the crypto space and how I got involved with it, because we made a lot of early investments back in the 2013-14 timeframe in the Bitcoin space, including Coinbase, Zappa, and Blockstream, and sort of many other companies in the field. And then post Greylock, I did a handful of early investments in that particular space. So as Connor mentioned, I invested in Binance, FTX, Solana, Serum, sort of all within this time frame, just because I knew a lot of the really early people involved. And then I guess to catch up most recently today, the thing I'm doing now is I run my own venture capital fund called Race Capital. We're a VC fund mostly focused on enterprise infrastructure across all various fields, open source, financial infrastructure, security, data infrastructure. We look pretty broadly at things. And I finally now get to do a lot of the stuff that I've been doing over many of the career. But just, for myself, it's our own fund that we started in our own image. We're the lead investors in all the deals that we do. So I've gotten to take a lot of all the lessons learned and things I've done, including stuff from Cal Poly, and a lot of that has been crystallized in today. I realized that was probably a long intro, but I also didn't want to go too far into a lot of like the individual stories or whatever. But again, like if anybody has like any particular questions, I'm more than happy to elaborate on any of those points.
Yeah, no, that was really good. I think we're going to transition right into some of the info on cryptocurrency, and then we'll dive deep into all of it, get all the Q&A in. So I will share that right now. All right. So we haven't talked a whole lot about cryptocurrency here in this club. We're hoping to do a lot more about it because it is becoming way more prevalent in kind of the investing and just kind of the asset management industry. So can I get a show of hands? Does anybody here actually own or hold any cryptocurrency whatsoever, like anything? Can we get like hands raised? Okay, there we go. Look at that. Okay, so a lot of people here actually do hold it. Whether or not they understand it, I have no idea. And that's kind of what we're going to focus on a little bit now. So cryptocurrency, kind of just the overview. They're digital currencies, and they run on technology, which is the blockchain, or at least a majority of them do, which is a decentralized network of computers or miners, which are securing the network. And there's currently supposedly over 9,000 cryptocurrencies. But if you look at tokens and all the random ones, I even the other day made my own con coin because I wanted to see how easy it was. It is very easy. So there are probably hundreds of thousands if you really look at it. So there's definitely a whole lot of them. Something people always bring up is are cryptocurrencies like even legal, right? Like, can the government stop them? Can they, say, hey, this is illegal? And it's actually been tried. India tried to ban it. Nigeria tried to ban it. It hasn't really worked out yet. I think it might even be illegal in Russia as well. But Janet Yellen herself, the Treasury Secretary, she said the Federal Reserve has no authority to supervise or regulate Bitcoin. It's decentralized, and the guy who founded it, Satoshi Nakamoto, he's anonymous. Nobody knows who it is or the group that created it. So there's really no way for them to crack down on it. They'd have to stop pretty much every single computer securing the network today, which is probably in the hundreds of thousands or even millions. So that would be very hard. Another thing, the SEC is in a lawsuit with Ripple. It's one of the, I believe, number 3 cryptocurrencies, top 3 as far as valuation right now. So that's kind of one of the biggest lawsuits and just cryptocurrency legality things right now, because if the SEC cracks down on them, there's going to be a lot of other companies getting cracked down on, or cryptocurrencies, because that'll set a precedent for the next decade. Another thing, scams are abound. Don't send your cryptocurrency to somebody unless you know them, or there's like an actual reason to do it. If you have your cryptocurrency on another, like your own wallet or something, if somebody asks for your private key or your seed phrase, which unlocks your whole wallet, just don't give it to them. Make sure you understand kind of how you can keep it secure, because there are scams all over the place. People message you all the time. And nobody, if you send them any cryptocurrency, will send you any more back. That is not a thing. That's been a scam for the past probably 4 years, and people fall for it all the time. Even if Elon Musk asked for it, somebody hacked Elon Musk's Twitter and actually asked people to send him money. I believe they stole like $100,000. So even if Elon Musk asks you, don't send it to him. He won't send you any more back. That's not actually a thing. And now Gabe is going to talk a little bit about how to buy cryptocurrency.
Okay, so there's a plethora of reputable exchanges to choose from when purchasing cryptocurrencies, and either you can do that by like bank transfers or wire transfers. And these are just a few that I've listed, and they're organized by lowest fees, because when you purchase cryptocurrencies, you have to pay a certain fee to actually purchase the coin itself. And starting from lowest to highest fees is Binance, Kraken, Coinbase/Coinbase Pro, which allows you to set stop losses. It's the one I use personally. Then Cash App and PayPal, which is more for laymen, and also GBT, right? And Coinbase IPO tomorrow. That's going to be interesting how all cryptocurrencies react to that. I was looking at Binance. Binance is having a killer day, like crazy move. XRP, sorry. And GBTC/future ETFs are also good options, but the issue with those are you don't actually own any cryptos themselves, and sometimes you have to pay for premium, which for those that don't know, that just means that the actual price of the GBTC, which is just the ETF, or not an ETF, but is just a proxy for Bitcoin, is actually currently trading below the actual net asset value of Bitcoin, but sometimes you have to pay for premium. Why have cryptocurrencies outperformed? Obviously, there's a ton of reasons, and these listed might not even be the reason, but these are just the ones that I've come up with. There's wide-scale adoption on balance sheets of large companies. Square currently owns 8,027 Bitcoin. Tesla owns about 2.5 billion worth of Bitcoin, and MicroStrategy obviously owns 91,065 Bitcoin. And there's been a large accessibility to the public with services such as PayPal and Squares that allows the common person to become involved very easily. And there's been large institutional adoption from large banks such as Citibank, JP Morgan, et cetera. And there's also been inflation fears. I know MicroStrategy and Tesla put cryptocurrencies on their balance sheet in order to hedge themselves from the devaluation of the dollar, which is what DXY stands for. That's the proxy for the dollar, which is actually down 11% from April of 2020, I believe, which is a big move considering the dollar. And also Bitcoin halving event scarcity for newly mined Bitcoins, and it's currently standing at 6.25 Bitcoin. And every 4 years, there's a halving event where every newly mined is only gets halved. So currently it's standing at 6.25, and then when that halving event occurs again, that Bitcoin would be halved.
And just to clarify, that's per day, right? 6.25 mined per day. Is that what it is? Or is it per week, per month?
I'm not 100% sure.
I want to say
I
it's
think
per day.
it's per block.
I think it's per block.
Oh, per
Yeah.
block. So
Per
it's
block.
Yeah.
however long the block is. Yeah, okay.
Per block, which tends to be kind of every 10 minutes or so. And all that's sort of baked into it. So yeah, the biggest thing with Bitcoin and a lot of like the people who built it in the beginning is that it is a naturally scarce provable asset. And the fact that there will only be 21 million Bitcoin ever created. And this is in stark contrast to a lot of the fiat currencies we're typically accustomed to, which is why a lot of people hearken it as the digital gold or sort of give it that narrative, because it has that sort of similar quality to it of digital scarcity, which was before Bitcoin was a very hard thing to prove out. And that was kind of the main technical innovation that it created back in 2009.
And I think something to be said there, though, is that gold, when the price of gold rises, people just go out and mine more of it. Like you can't, I mean, there's a limit to how much can be mined, right? Every block. So when the price rises, people want to mine more, but realistically, the amount given out is the same. It's just spread across more people. But gold, they're continually finding more gold. Eventually it will run out, but, the price rises, more miners pop up, and the price lowers because there's more supply.
So are cryptocurrencies a good investment? Bitcoin is the best performing asset of the past decade, and that's shown in the 10-year compounded annual growth rates on the left. And some other currencies, also known as altcoins, have yielded huge returns since inception. So things to keep in mind: Bitcoin and all altcoins are extremely volatile assets. So those who can't handle swings and large down draws, please be advised. Any history of past performance is not indicative of future returns, and we are not fiduciaries. Obviously, we're just a bunch of college kids. We don't really know anything. So please do your own due diligence and only then commit capital. And that's just good advice for investing in general.
Yes.
All right, so that's about what we have on cryptocurrencies. I guess, Chris, leading into that, do you want to kind of tell us how you even got into this space from venture capital and how that led into where you are today, I guess, and what you do today?
Yeah, I'm happy to focus this more on I guess the crypto stuff specifically, because again, yeah, I have spent a fair amount of time on it. I guess just one thing to realize, I guess it's easy to look at the returns and performance versus other asset classes. Although one thing I guess you should be aware of is just what these things are, what the intention was to start with. Because very differently, like Bitcoin, why it's so hard to understand sometimes is Bitcoin is it's not a company, it's not a currency. There's no CEO of Bitcoin. There's no cash flows of Bitcoin. There's no company behind it. It's an amorphous network of a scarce digital asset that other people happen to want too. And it's easy to look in hindsight, well, Tesla bought it, so shouldn't I buy some? But I guess back in the 2010, 11, 12, 13 timeframe when this wasn't clear, I guess the question is why was there even people wanted this to begin with? And so at least in my head, Bitcoin is the ultimate experiment. It still is very much an experiment, and that they're trying to create an alternative asset that is pinned by the blockchain. In this case, it's the Bitcoin blockchain that again is provably scarce, that cannot be tampered with. And that this asset is going to have this property of it's going to store value kind of innately in it. And that other people are going to want it, and other people are going to want to trade, buy, sell, denominate things in it. And so when you look at the majority of the exchanges in the space, the quote current currencies that they use, if you see ETH whatever or XRP or whatever, it's usually one of two things. It's usually in dollars, usually a USDT or USDC dollar denominated format, and usually Bitcoin, because there is a large community of people who want to and believe in the story of Bitcoin and want to hold it for the long term. But you are effectively, it's an alternative asset. It's not a stock. It's not a derivative. It's not a currency. It's a weird thing that a lot of people bought into. And then this is the, I guess, simplest conception, if you will. And again, it gets more complicated when you look into mining. It gets more esoteric when you look into kind of who's behind it or whatever. But Bitcoin is the simplest construct. Everything else down the spectrum, now you're getting way, way, way more speculative and way more, I guess, protocols attacking certain different other things. For example, Ethereum is the conception that people aren't just going to use these things as an individual store of asset. People are going to want to build applications on this using AKA smart contracts. They could be games, they could be apps, they could be dApps, they could be financial applications, DeFi related stuff, but people are going to want to use this blockchain thing and build things with it. And there's not just going to be one currency, there's going to be a whole bunch of different things. People can create their own tokens, ERC20 tokens. They can create fungible or non-fungible assets, ERC721 assets. But this is sort of that conception and sort of that whole world associated with it. There's other ones like I was the very first investor in another protocol called Solana, which their whole bet was, okay, if developers and people are going to really build on this, you're going to need a blockchain that can scale, and not scale to thousands of users. You're going to need to scale this to billions of transactions, billions of users. It's going to have to be fast. It's going to have to be cheap. Like, you're going to have different characteristics around this. So instead of trying to build all these layer 2s to make Ethereum go faster, why don't you just construct the individual layer 1 protocol itself to be able to handle all this from the ground up? But again, that's like, now you're not only betting on the asset, you're betting on the developer ecosystem, and you're not betting on just the developer ecosystem. You're betting that this developer ecosystem is going to reach consumers at scale. And so the weird and fun and cool stuff about this crypto space is, again, you see a huge amount of experimentation and many people doing sort of different pockets of this, whether it's the simplest, just, hey, we're trying to create a new form of gold, or, you know, the most complicated, weird, esoteric stuff of like, we're trying to do marketplaces and fractalizations around NFT assets for creators and artists to be able to do digital representations of their artwork or whatever. Like, you can get into like some really weird stuff. But yeah, the crypto space isn't this one singular thing. It's this kind of a collection, this ecosystem of all of these different projects and all these different developers doing kind of many different fields in the space. So Connor, I forgot what your original question is, but like that, I guess just based on the presentation like this, just some like initial thoughts that come to mind.
No, that was really good. So you graduated, you graduated during the financial crisis, correct?
Yeah.
So what was that like? Was that pretty hectic?
It was funny to look back in time. I wish I'd been working for a while and I had more wealth to buy a house, because like that was the absolute perfect time to buy any amount of property. So I moved to Palo Alto, as I mentioned. I went to University Cafe, and so my first apartment, I actually moved in with 2 other people from Cal Poly. We all got an apartment on. If you haven't been, Palo Alto is where Stanford University is. And University Avenue is basically the downtown street that leads into Stanford University itself. It's a very, this is like where Facebook got started, where Google, where PayPal, where Palantir, many companies. It's a highly sort of coveted place. When I moved there in 2009, there were vacancies in downtown Palo Alto. All the buildings weren't taken up. Me and my 2 other friends from Cal Poly, we got an apartment on University Avenue for like, I think it was something on the order of like $2,000 a month or whatever, split between the 3 of us, which at the time, like I did not fully appreciate how much of a just absolute steal that was. And I remember the first week I was there was like this little community newspaper, Palo Alto newspaper or whatever. And like the headline was, is downtown Palo Alto going to go away? Are all the tech companies going to, you know, leave? Is this like the end of Palo Alto? It was a dire situation in 2009. There was a lot of fear. There was a lot of uncertainty. A lot of companies had to downsize. And that was like also in part too why, like when I moved there, I didn't necessarily have like a job or whatever. Like there wasn't like a lot of places hiring. Like there's again, just a lot of like fear in like the general market. So these corrections tend to happen. In the crypto space, you see them happen even more dramatically and more often. So like that is one thing like you very much have to be ready for. But yeah, in 2009, it was a global financial crisis, and everybody felt it, even me myself there too.
I see. So the rent was lower, but like you yourself didn't necessarily, like you felt it, but like it didn't affect you a whole lot, or you didn't notice it as much at the time as you would have.
Well,
you're
when you're an
working?
undergraduating, you probably don't have a whole bunch of assets or equity. Maybe you guys have a big equity portfolio, but me at the time, I did not have a big equity
Yeah,
portfolio.
no.
I didn't have much savings, and then since I was a college student, I was used to living very cheaply.
I see. So
We
it's
did a
kind of
lot
just
of
a,
yeah,
just kind of,
ro-
you moved right
ro-
into it like, oh, it's just a financial crisis. We're going to live the same life. Yeah.
yeah. So yeah, we didn't. Yeah, we got a nice place, but it wasn't like a crazy fancy, apartment or whatever. We used to mostly cook for ourselves. We lived like college students because again, that's what we graduated into and we're used to. Which, by the way, that has a lot of benefits towards it. Now I'm at like a very different stage in my life where I'm married, I have 2 kids, like we have a house, we have all that. I wouldn't be able to do a lot of the same stuff. I wouldn't be able to
Yeah.
just pack up and move somewhere and start something with no prospect or no whatever. I wouldn't necessarily be able to live off rice and beans for like the next 6 months of my life. Like I wouldn't be able to work 24/7 and like literally not sleep. Like, so again, like it is a downside of having no assets, no things, no responsibility, but there's also huge benefit towards doing so. Which is probably why you see more of the younger generation in general tend to experiment with a lot of this stuff, because even just the basic fact of like you have more free time to do a lot of this stuff. So I would take advantage of that as much as possible.
No, yeah, that's what it seems like. Just about everybody that speaks at any club or even to any group of teenagers, that's like the common things, like take risks, do the things that you are able to do now that you probably won't be able to do in another 10 years.
Yeah,
I see. Yeah. Oh, no, keep going.
and it's easy for me to say that. I mean, one other tactical thing which I'll tell you guys, which I used a lot when I was a college student, and I think you guys should do too. um, People really want to help college students, and so you could like you might not think so, but you can literally reach out to anybody with your calpoly.edu email address, and more likely than not you will probably get a response back. And you could also ask for things that you probably shouldn't be getting otherwise. Like, for example, I remember my roommate at the time is this guy named Brian Riley, who ended up doing this company called Guardian Bikes, who was featured on Shark Tank and all that. But me and him, there was this conference in San Francisco that we really wanted to go to. It was like this private equity green tech conference only for like super rich people or whatever. And each ticket, I think it was like $10,000 per ticket or whatever. And so me and Brian, we just emailed the organizer and we said, hey, we're students, we go to Cal Poly, we're studying about a bunch of the stuff and investing. We'd love to come, we can volunteer, we can do whatever. And the organizer was like, oh, we'd love to have you. Like, we don't have enough student representation. Like, here's some free tickets. And so we got, wine, dine taken care of. Like, I think we were juniors at the time. So again, like, don't use it too crazy. Don't go crazy with it. But people really want to help college students, especially other people and other alumni. So like, go try and find things, do things that you might not do otherwise. Because at the worst case, they could always say no, and you don't gain or lose anything. So again, try to push the boundary as much as you can, especially while you have the free time and flexibility to do so.
Yeah, no, that's a really good. And the people in the entrepreneurship club, they had some past presidents come in, and they, apparently they emailed the Snapchat CEO so many times with their .edu email addresses. Eventually, after like months of emailing him and standing outside of the headquarters, I think even at one point, they got a meeting with the guy, and they were like, "Yeah, we just got a meeting with him, but it took thousands of or hundreds of emails, and they were like, yeah, we just did it." And so it's definitely pretty crazy what you really can do with that .edu email address.
Maybe don't go too crazy.
Maybe not. Yeah. No, I see what you're saying. Yes.
Yeah, it might not feel that way, but it is a valuable asset to have, just the pure wanting to learn and sort of being naive about a lot of these things, because there is benefits in not knowing how the world works and creating sort of your own image of it.
All right, sounds good. Yeah, so I think we're just going to open it up to questions now. I believe David has a question. He's got his hand raised. But anybody else who wants to ask a question, you can drop it in the chat or you can raise your hand. That's the easiest way, because then I know you want to speak and you can be up next. So yeah.
Yeah, cool.
Shoot
Thanks,
away.
Connor. Thanks, Chris. Awesome hearing from you, man. So my question was, you said when you were in Palo Alto early on back in 2009, there was a lot of talk about like everyone moving out of Palo Alto, like will it be the tech hub anymore? Do you see, excuse me, do you see any parallels now? Like I know a lot of startups are kind of decentralizing from Palo Alto, the Bay Area, and going to like Austin or even LA is kind of getting a tech scene. Miami is another one that comes to mind, Salt Lake City. Do you see that as like a true decentralization of the Bay Area, or do you think it's gonna all conglomerate back there?
Yeah, yeah, a few sort of interesting things on that. So like when I worked for Greylock, like one of the top funds in the Valley, like I would make the joke that wasn't really a joke that basically all of our investments were 20 miles from like the Bay Area. Like even San Jose, like even LA, like that was like way too far. San Jose sometimes felt too far too. Like literally everything was around either San Ho Road, the Menlo Park area, or San Francisco. Because there's a lot of bias structural reasons why that was the case. But again, for a lot of reasons, a lot of the investments just tended to be very Silicon Valley centric, so Silicon Valley dominated. And it was hard to see how that cycle would break. But the one thing that broke it was the unexpected thing of a worldwide pandemic called COVID. Post-COVID, there wasn't really a choice. Like investors had to be comfortable hearing pitches on Zoom, not meeting the founders, not necessarily knowing where people are. A lot of the companies we talked, I can remember there was this one company we talked to. The first time we talked to them, they were in San Francisco. The second time we talked to them, they moved back home to Toronto because they wanted to save money and live with their parents, and employees are cheaper there. And it's cool. Like, what do you like? It doesn't really matter necessarily where you are. It just really matters what you're building and what you're doing. And so I think everybody's forced to confront this reality. And now that people are accustomed to this over the past year or so, I think a lot of this will persist out. And then if you don't necessarily need to be tied or tethered to a geographic location per se, you could effectively pick anywhere you want. A lot of the tech people, for whatever reason, really loved Miami and Austin and gravitated towards it, but it doesn't really matter that much anymore. I would say the only thing that matters is, again, if you decide to live wherever, is pick some sort of reasonable time zone time frame. I think it'd be quite harder if it's in Asia or like Eastern Europe or something. It's possible, but it just tends to be like a little bit more difficult for sleep and sort of living reasons. But as long as you pick a somewhat reasonable time zone, yeah, it effectively doesn't really matter where you are anymore. Even here, like I'm assuming everybody's in San Luis Obispo, but like I have no idea. that could not be the case.
Yeah, we were based in San Luis Obispo, but we've like spread out all over the country now. We've got people in LA and Illinois and like everywhere. So it's kind of cool. I mean, I'm not really in a rush to bring everyone back to a central location anymore. I mean, we're doing fine at the moment. So I just think it's interesting that shift is just so drastic, so quick.
Yeah.
Did that answer your question though, David?
Yeah, absolutely.
Okay.
Yeah, thanks, Chris.
I believe Mason is next. Mason, do you have a question?
Yeah, so I just wanted to ask how your transition went from being a founder to getting in VC, and what was the decision to do that like instead of maybe weighing out other options or trying to start a new company?
Yeah. This is a longer story, but let me try to shorten it as much as possible. So after I sold Startup Digest to Techstars, I helped them out for a little bit, and then I actually jumped straight into doing another company. At Startup Digest, we ended up building a lot of internal community tools for ourselves to manage a lot of our contributors, leaders, a lot of our sort of external community and all that stuff. And so we thought, why don't we just take all this stuff and productize this and then sell this to other companies? We're so, I don't know why, like I always tend to be so early on these things, but we were so early, there was no like words for this stuff yet. Like this was pre-Slack, pre-Discord, pre all that stuff. I guess the closest analogy that you can draw is like we were trying to build like the early prototypical version of like what Discord is now, but we were trying to do this for like external groups and communities. But it was really weird. People didn't really understand it. I mean, it was very hard to sell this into companies. Companies just like, companies weren't, at least at the time, like weren't really used to like dealing with external distributed communities. It wasn't like a natural thing for them. However, the one group that did end up using it the most, which I got involved with, was the Teal Fellowship. So I ended up being like a super early mentor for them and helped them pick a lot of their classes and everything. And they were a big user of the tool that we built, which we called GroupTie at the time. And one of the sort of biggest users within the group itself was this guy named Dan Portillo, who was a partner at Greylock. And Dan kept asking me again and again and again, can we use this for Greylock? And I kept saying, no, 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 no. And the reason why I said no is I didn't want any VC to use the tool, because as soon as one VC used the tool, me as the founder, they would ask me, oh, if Greylock's using it, did they invest? And if they didn't invest, it would be a very bad signal for me. And so I basically told every VC, like, you can't use it. But if VCs love being told something more than anything else, it's being told no, because it makes them want it even more. So he kept pinging me all the time, over and over again. I hung out with them many, many, many times over the years. I would never let him use it. And long story short, when we were winding down the company, when it was kind of clear it wasn't working out, Dan was like, hey, can I finally use it now? And I was like, hey, man, like it didn't work. Like, you could use it if you want to, but like there's not that much here. And so we ended up brainstorming about a bunch of community stuff, how community could be applied to venture and all that. And we ended up doing this big like whiteboard session. And at the end of it, Dan was like, do you want to do that here? And I was like, what do you mean? He's like, do you want to join Greylock and just do what you said? And I was like, okay, I wasn't really, intending this, but I didn't really have any plans sort of post closing down the company. And so my original intention, I was just going to join them for a few months, help, get the community sort of get up and going and sort of leave. And then 3 months turned to a little less than 5 years. So I ended up staying there for a while, both to build the community network-based side, do a lot of internal tooling there, and ended up doing a lot of the investment side and investment work through a lot of these emerging ecosystems, which again, that's like a much kind of longer story. But yeah, my path into venture was a very not a typical path. And in general, actually, most people's path into venture is also not like a super obvious one, just because the fact that most venture funds in general don't tend to be very big, nor do they hire like a lot of roles. And so most people, how they find themselves in there tends to be kind of like a unique, weird story. Like venture capital funds rarely, if ever, post a job posting and hire somebody through there. It just doesn't normally kind of go that way. And so that's my unique, weird story and like how I ended up at Greylock. I don't know how transferable or how much lessons learned there is per se. But yeah, that's at least my story.
That's really interesting. Thank you. Yeah. So it sounds like you kind of came in almost to help with some of the internal like operations. Yeah. And well, I was just asking because typically like the path, not that there is a typical path, but it's you start a company or you have a successful exit, and then now you've had operational experience running a company, and that's really important as a venture capitalist. Yeah, always interesting to hear people's paths in. So thank you.
Yeah, a lot of people on the analyst or principal side, they've either worked at a company that venture fund is backed or had some experience, or they've usually had some relationship with a sort of prior partner of like they've done work together, co-invested in together. So yeah, again, venture is just one of those weird things where everybody has their own kind of unique story of how they fell into it. And I think a big reason why is like you guys are in the finance department. It's a supply and demand situation where there's a lot of people who really want to work in venture, but just structurally, there's not a lot of supply. Like even the biggest funds in the world, like a Greylock, like had maybe 40, 50-ish people, and 9 of those were EAs. It's just not a very big firm on a person-wide basis. There's a few exceptions, and Andreessen Horowitz maybe being the one of them with like the biggest team, but in general, venture firms tend to be pretty small.
Ethan, did you have a question?
Yes, I do. So hi, firstly, great presentation. I really enjoyed it. So I am a CS major and I have enjoyed my studies, stuff like that. But generally I found that I'm pretty bored coding, and I have a great enjoyment for investing in things like that. And I've done a bunch of coursework in artificial intelligence and deep learning and natural language processing, all those cool buzzwords. And basically, I was just wondering, and I think there's a ton of opportunity that will be in those fields in coming years. And I was just wondering if you knew anyone who also took a path from like you were once a CS major and then they sort of transposed to being an investor or in venture capital. I mean, short of just like starting doing their own startup and then going that way. So just don't know if you knew anyone like that.
Like going straight into VC stuff, you mean?
I mean, just like, I guess people who, I mean, I think with VC, it's always kind of a wandering path, but I was just wondering if you knew anyone who started out as a coder and then maybe just, somehow ended up at VC.
Yeah, definitely. Yeah, I don't know if I say yes also with the precondition is I don't know if I have a representative example of someone in my head that did that per se. Although I was going to say, I guess back to like the crypto side, you see that all the time in the crypto space. Where somebody was, and it can either go one way. They were like a really well-known trader at a certain place and then got into building stuff, and that would lead them into either trading or HFT stuff, or they build their own DeFi project, or they join an exchange, or the vice versa, where you have somebody who's a really talented developer that just really got into financial stuff for whatever reason. Some of them worked at, sort of bigger financial firms, or a lot of them even went just straight to the crypto space, trying to take and build products that are more financial infrastructure oriented, but doing it kind of around these new rails. And a lot of them, like one of our, maybe let me give you a real example. One of our most successful companies in our portfolio is an exchange called FTX. FTX was started by this guy named Sam Bankman. Sam was he was a former trader at Jane Street. So he was a well-known trader, developer at Jane Street. He sort of graduated at the top of his class. People knew him, but he was very much kind of in the financial world. And he just got really obsessed with crypto and trading and finance. And he was already in finance, but he just got obsessed with crypto. And so he ended up creating a small trading firm called Alameda Research Group. And then at the time, they don't really around anymore, but BitMEX used to be like the biggest sort of derivatives platform in the world. And they had this feature where they had like a leaderboard and everybody's names was masked out. They were all pseudo-anonymous. But Sam, when he was basically top of the leaderboard, #1 trader basically in the whole world, at least on the BitMEX leaderboard. And he switched his name from pseudo-anonymous to Alameda Research Group. And like, as soon as he did that, like literally everybody was like, oh my God, like you need to take all the money, do all the things. What are you doing? And there are many, many stories, but long story short, he was always frustrated with a lot of the exchanges and the toolings and the API. Because again, he was a developer and trader. So he really understood both sides of this. Or, his big idea was like, he needed to build just not the tools themselves, but he needed to build the trading venue himself. And so we invested before the exchange was launched. It eventually turned into what is now today FTX. They ended up doing mostly, they started doing off mostly derivatives and futures. That was kind of their core sweet spot. They have since broadened out to cover everything. They're one of the fastest growing exchanges in the world. It reminds me, I also invested very early on in Binance. I was one of like the first 100, if not like, I was one of the very first like 100 users for Binance. The FTX team and their story and how they've executed really reminds me of Binance in the early days. They're extremely aggressive. They set really big, lofty goals for themselves. They always are able to execute against all those. And they do this continuously, time and time again. Again, I just use this more as an example of there's many other founders with stories like this. But yes, 100% people coming from the development side and the financial side, if you can figure out exactly where to point your talents or interest into, I mean, that's one of the hardest, most coveted skill sets you could possibly imagine.
That's awesome. Thank you. It's definitely a good thing to think about.
Thank you very much. That was a really good question. I believe, Chris, you have to get out of here around noon because we can try and kind of cut it a little bit short for you.
I could take a couple more if people are curious
so
about that.
AC has a question. He was messaging me. I believe he's just got voice, he or she.
Yeah.
He's got it. got
All
it.
right. So my question is, do you know of any sort of like crypto coins that are based off of real world use and application?
Real world, like what do you mean by real world use and application?
Like as in, for example, there's like a coin called Solar Coin, and it's based off of the amount of solar energy that you basically like have based off of solar panels, how much solar energy you collect and you get like the coin. Something that's like based off of like a tangible use in the real world.
There's been a bunch of attempts at this. I don't know if any of them are big at scale. Like, there's been a lot of things in the solar and energy space. There's been conceptions of this in like the mining space. So you can like represent the hash power, hash rate as like an underlying token itself, which is all freely tradable. There's been a few sort of things around that. There's this other guy we met that had this really crazy idea of like basically doing a sort of blanketed mesh network around Bluetooth and compensating you through like a token around that. It's really cool. They actually built it. Like, it's not like a top 100 token or whatever. The other one, I'm forgetting the name, but Multicoin invested. They were trying to do something very similar, but around like an internet mesh network. So
I think I know. Are you talking about Helium?
Yes, Helium. Yeah.
Okay, yeah.
You buy this little box and then you basically set it up, and then that basically blankets your area with Wi-Fi, and the more connections you get, the more token you receive, and you're incentivized for keeping it on and sort of sharing sort of your internet out there. I have no affiliation. We didn't invest. It's a cool concept. We were very sort of skeptical about it in the beginning, but it does seem like they've gotten at least a little bit of distribution. So there's been attempts of it. Like there's no super successful ones yet. It's still, I think, like an early field from that perspective.
Yeah, I think I got a couple ideas for that. I know VeChain currently does that. They track products, so you can buy. I believe there were cryptocurrency people buying e-cigs solely because they were tracked on the blockchain. I believe Puffs has a partnership with them. They have partnerships with Walmart and stuff. So that'll be coming hopefully at some point where you can like, where your box is. Like, let's say you buy something, you can scan it with your phone, and then you can look on the blockchain everywhere that thing has been, and then you can kind of track it, I guess, which is a cool idea. But yeah, Helium, I believe they have 30,000 hotspots right now, but it's more for Internet of Things, right? Because the limitation is like 1 megabyte per second or so. So it's more for like your house or your dog collar or your lock or whatever. And there's people are making so much money in coins that they can't make enough of them to supply the market. So, if you want to buy one of those, they're worth like $10,000 now for a little $200 box. So currently it's going to be months until that network really gets built out, but it's been pretty interesting to hear about it. There's people in New York talking about it that are making $500 a day because they have so many connections. It's kind of like they're making their own 4G network essentially, but people get paid instead of the towers, I guess.
Yeah, it's kind of like essentially what we're talking about is tokenization, right? Because like with something like Bitcoin, essentially the scarcity is from the cryptography itself. But when you move into trying to tie that to a real world asset, then we're talking about tokenization, and you lose that cryptographic scarcity because there's no direct bridge between something that exists in the real world and something that is purely digital. So you have the tie of the like instance of tokenization, but that's it. And if someone can forge that instance of tokenization, then they can print coins, right, or tokens. So as much as we can peg like an NFT to anything we want, we also lose that advantage that something like Bitcoin has, where there is no way that we can print a coin at all, like it's cryptographically scarce. You do lose that when you tokenize something on a blockchain too and tie it to something in real life. So that's just a point to consider there.
Yeah. Connor, how about 2 more rapid fire questions from anybody if they have it?
All right. So does anybody, I have a question, and I think, do you have one, David? Anybody else?
Yes, I do. You mentioned that you're running a VC fund at the moment on your own. Do you also do like angel investment on the side? Because you said you were doing institutional kind of investment with your VC fund. Do you do early stage angel as well?
Yeah. Long story short is no. So when you do your own fund, like you really, especially if it's your own fund, like you have to kind of put all your time, effort, and energy into it. Especially from our LPs, the people who we raise from, like you can't it gets a little bit dicey gray area if you're trying to mix personal stuff and other stuff. So no, everything first sort of priority order goes to raise capital of the fund that we started.
Cool.
I think, and then I had one last thing. So I actually found a quote from your LinkedIn that somebody said, and they said, Chris is what I call a super pimp. The guy's brain is like a multi-core on nitrous oxide. In lightning speed, he can think at the most strategic levels and within a nanosecond dive deep into the granular details on almost any topic. Silicon Valley is fortunate to have him here. Plus, he's a cool dude. I guess, can you talk a little bit about what that even means, or just
Who wrote that?
I think Jason did. Jason something. I don't know his last name. Yeah.
I appreciate the quote and the kind of I'll try to make it not so self-serving about me, and then maybe try to sort of leave one sort of more thing to think about.
Yeah, and I guess I was just gonna add on specifically, like, do you have any resources, books, podcasts you like on top of that? Just kind of how we can become super pimps as well.
Maybe I'll I was always I'll answer that in like a few ways. So one, I can say like, oh, read, I don't know, Good to Great and blah, blah, blah. And most people sort of quote the top sort of 5 inspirational books and say, go read that and you'll figure it out. And I don't know, like even as a student, like I always felt like they were not as useful, I guess. Like it's good to know and read and listen to all the more sort of pop culture type things, but like they weren't the things that like inspired me or moved me the most. The two sort of things I would suggest, which are not specific things, but are more general technique things, I guess, is one, do what you love. Like don't do what everybody else is trying to do, and don't do something just because you think, I don't know, it's cool or it can make a bunch of money or whatever. Like you have to actually intrinsically love what you're doing, because if what you're doing turns into a company, just know like that's going to be a 7 to 10 year endeavor at least, if not more than that. So like you better love what you're doing, or like you're going to be pretty miserable for most of the time. And the second thing to add on to that to kind of cover this is whatever you love, like just let your like interest take you there. And so I have for better for worse, I have like a personality type that whatever I get into, I tend to get like very, very obsessed about. And I tend to try to learn like everything there is to humanly know and talk to everybody about like something. And it could be super esoteric, or it can be like more recently, I've been spending a bunch of time on this really weird network called BitClout. I spent a bunch of time, effort. I know a lot of people, I know a lot of things. It's really weird, esoteric. Like I don't know what this thing's to become, but like it's fascinating. And so I spent a bunch of time on it. Or like more from a personal standpoint, I've done a lot of photography stuff. I was the National Geographic Photographer of the Year in 2016. And for a long period of my life, and even now, like I just got obsessed about camera stuff, and I wanted to learn everything and try all the cameras and all the things. And I just know too much about it, probably. Is all this knowledge useful? I'm not sure. But like if you're genuinely interested in something, like you just tend to go down the rabbit hole and kind of find the things that are written from the practitioners themselves, not like the high level like motivational quotes. Like you tend to get more into like the nitty gritty detail. So like whatever it is for you, like I would just recommend like go down the rabbit hole and like whatever your interests are, and don't try to dictate what they are. Just sort of go with the flow, so to speak.
No, that's really good. Yeah, because a lot of people say to just read books, and then it's like, okay, and then what do you do next? And it's like, yeah, that passion is definitely important. Yeah, thank you for coming, Chris. Everybody else who was here, thank you for coming. It's been an awesome meeting. Probably one of the best of the year, hands down, and longest. Can people find you on your website? Is that the best place to find you? You have a newsletter on there too, correct?
Yeah, I do so much stuff. If you search my name, it's pretty easy to find me. So Chris McCann, I'm on LinkedIn. I have a newsletter that I publish on Substack. I have a personal site, just chrismccann.com. I don't know. If you want to follow me in any of the places, feel free to search me, I guess.
All right. Well, thank you everybody for coming. Thank you, Chris. Next week, we got somebody coming in from an early investor in SpaceX. And so that'll be fun. We're going to have all kinds of more events, and I'm sure you can come back and we'll have you speak another day possibly next year as well.
Cool.
So thank you.
Sounds good. Thank you, Connor. And then great to meet everybody. And I'm jealous of you guys. My time at Cal Poly was awesome. So enjoy and have fun too.
Thank you.
All right.
Yeah, no,
bye,
and
guys.
Chris is also in the Discord, everybody. So if you have questions you forgot or something, hit up his website, Discord.
Cool.
Yeah, thank you.
All right. Bye, guys.
Thanks, Connor.
Thank you. Thank you for coming.
Thanks for the invite.